Welcome to another Market Matters weekly video update. I'm Nicholas Forsyth. I'm joined by James Gerrish again. James, welcome.
Thanks, Nick.
James, let's kick it off today with some of the recent portfolio moves. This morning, everyone would have got a couple of alerts. There would have been, one about buying BHP, and I guess it shows, the market for you corrected off its highs about 14%, and we've moved in. And the other was Regis, which we were saying we'd buy under 3. Obviously, we haven't been filled the stocks since, at the moment, last time I checked, about 307, 308. So just wanted you to step everyone through the rationale behind BHP and also, the plans around Regis moving forward as to whether we maybe chase it or we'll wait and we're confident it'll get under 3.
All right, so BHP to start with, we bought this morning on the open 24.10. We've added 5% of the portfolio into BHP. We've been stalking it for a while. BHP was trading around $28. We're looking for a pullback down to that 24 region. We've spoken about it a number of times. We think that area of the market, we didn't have any resource stocks other than a gold position in the portfolio. That reflationary trade around what's happening globally, Trump is only one element of that. There's global PMIs are ticking up, global growth is ticking up, etc. Interest rates going higher. It all sort of feeds into that positive resources trade. So this pullback 13% is an opportunity in BHP. So we put it in the portfolio 5%. If it goes back further, we'll probably go to 7.5%. So we like that for a push back up to those new highs somewhere above 28. In the instance of Regis Resources, 295 we said, or around about 295. And I had a couple of calls this morning around what does that mean. So around 295. I give or take about 1% around 295. So we had orders in for our side at 298, which is 1% above the 295. So we didn't get filled. The stock's bounced. We're staying patient, so we haven't bought it, but we will if it comes back to that level. Okay,
just quickly on iron ore as well. Let's stick with that before touching on gold. We've got a short position, it's pretty much a short position with options on Fortescue at the moment. That's been a great one. Put it on when the stock was at about 7. It's now at 6.29 or something today. We've talked in the reports about closing that out at 6.23. The other one's Rio, which is awfully close to that $59 level. Now, I guess part of the issue, but also the strength of the service is we don't have infinite amounts of capital to buy all these stocks. Now, if they both get to our target levels, Fortescue 6 and also Rio 59, will we buy them or just err on the side of the caution given we've got some BHP exposure?
No, so in the instance of Fortescue, just to put it out there, so it's a short position through options on Fortescue. So we took that position on when Fortescue was trading around 7, targeting 6. It's around that 6.25 at the moment, Nick, before coming down to the desk. So we'll close that out. It's not we're not necessarily traders in our portfolio, but we like a little bit of alpha around the side. So, when we think a stock's coming back, we'll always put that out there to subscribers and put a particular trade around it or a structure around it. So coming down here before, doing this video, that position was up around 25%. We're going to cut that one soon, whether it's this afternoon or first up tomorrow. If we get another leg down in iron ore tonight, we're likely to close our Fortescue short position out and initiate a long position in Rio. So both of those have come close to our target. So 59 in Rio, if it opens around that level tomorrow, we'll buy it.
Okay, and next on Regis, you've talked about that and you've talked about target areas. The other one's Evolution. We did send an alert out on the Friday saying around 205. It actually that day wasn't there for long. It was actually around 206, 207. A fair few calls and questions like you would have got today around Regis about Evolution last week. It's now dropped lower around that $1.95 mark. What's the strategy there? Do you think we'll average that, or are we just happy with our position for now? And if it goes down to $1.80, what are the target levels you got in mind?
Yeah, so we look to average it today, as in that's why we took Regis rather than Evolution. So we were looking to add a small position, 2.5% in the portfolio of Regis. We've got 4% in Evolution. Of course, they're small positions relative to the way we normally transact. We will add it if it goes lower. So accumulating gold on the back foot, we firmly believe that is the instance. If the US dollar peaks around 105, that's when we'd average it again. So irrespective of what the price is at the time, we're looking more from a macro play. Because what happens is, gold is very much a speculative instrument now. A lot of flows come into ETFs when gold's going up, and when gold's coming down, a lot of money comes out of ETFs, and you get subsequent selling of the underlying stocks. But that changes pretty quickly. So gold and gold stocks are volatile, so you've got to be a little bit patient around your entries.
Okay, and banks this time of year, we've talked about in the reports, seasonally strong period, March for banks. Are we anticipating further upside? Like, do we think the likes of ANZ, which we hold and have done well on, and CBA are going to run 4 or 5% this month, or even more?
Not just this month, but probably into April. So March and April are really strong periods for the banks before May becomes a bit of an issue for the banks. So we're continuing to hold. You know, CBA yesterday, you saw the pretty significant underperformance of CBA yesterday. It's gone ex-dividend. The other three are paying dividends in the upcoming period. So that's where you want to be overweight in that area. So we'll maintain our holding to the back end of April, and then we'll assess it then. So yeah, high levels until then, Nick.
Okay. Any, like, other than ANZ, would you consider Westpac and NAB if you didn't have ANZ, or not really, just happy with ANZ at the moment, leading into that dividend?
Yeah, look, we're happy with ANZ. You don't want to go, we're talking about a month to 6 week window. So, if you're drastically underweight banks, now's a seasonally strong period for banks. So buy some, but don't go, you don't want to go massively overweight for such a small window. So we're comfortable with the holdings that we've got at the moment. We're unlikely to increase our bank holdings on the major four in that period, but we'll be on the sell side at the back end of April. Okay.
And lastly, I just want to talk about two in the portfolio that are, slightly down. Volatile ones. One's a shorter term trade, one's in there as a sort of bit of a riskier investment. Now, I find a lot of the time we get people that come on board don't have infinite amounts of capital, that can't always even replicate what we do, unfortunately. They may buy Altium, or they may buy TPG. They're the two I want to talk about, and they miss out on some of the other ones. Now, just wanted to get your updated perspectives on those two positions, whether they're still good value down here, or conversely, what our plans are moving forward with those two, and whether they might be better off switching.
They're down about 3% and 5% respectively, so not in the red too much. Altium, very comfortable with it. Altium's been caught up in the high PE sell-off of a lot of these higher valuation growth stocks, so there's nothing untoward in that company, so happy to buy it here. There's a bit of buying going in the stock today and yesterday as well. TPG I'll be a little bit less keen on to buy at this juncture. The reason I say that, and we've got to assess our position before the start of April. In April there is a Spectrum auction. TPG have made it pretty adamant last time they reported that they are wanting to be the 4th mobile provider here in Australia. For that, they need to buy Spectrum. If for some reason, if they go and bid a massive amount for the Spectrum at this option, there's likely to be a capital raising in TPG. So that's exactly right. That's a risk. It may be the low in the stock, but from a trading point of view, given it's a trading position, we'd be pretty reluctant to hold that going into the 4th of April Spectrum option. So I wouldn't be going out there buying TPG at this juncture. We're going to manage our exit before that auction date, so that we don't take on that added risk around them paying too much, or them launching a deeply discounted capital raising where something goes wrong, etc. We simply don't need that risk on the table before that date.
So I guess in a nutshell, you come on as a new subscriber, you see a trading position, you see it slightly down, you think, okay, do I buy that? Market matters know what they're doing, and the stock's down 4 or 5% from when they bought it. Do I go and buy it myself? That's probably pretty much a no I'm getting from you at the moment.
Yeah, not on TPG, only because of that timing. In most instances, yes. But as we can't. We hold those stocks, we'll assess them over time. So, if you came on as a subscriber, you bought TPG, and in a week's time we send an alert out to sell it because of the risks out there, that's the decision that subscribers make, but that's what we're going to be doing. So in our portfolio, we send out what we do in our portfolio.
Okay, thanks a lot for that comprehensive update, James. And as always, anyone watching, feel free to give us a call, 1300 301 868, to discuss anything we discussed and whatever's in the reports. We'll either answer that on the Monday, or conversely get in touch with you personally. And the other thing is as well, you can always hit the reply button on this email. That will go to info@marketmatters, and someone will get in touch with you sooner rather than later. Thanks.